Hi, I'm Alex. Before we delve into today's compelling narrative, I encourage you to subscribe to our channel for more in-depth insights into the intricate world of wealth and power dynamics that shape our modern society. The saga surrounding SoftBank's Vision Fund is a remarkable tale characterized by ambition, monumental investments, and staggering financial losses that have reverberated throughout the technology sector. Launched in 2017, the Vision Fund was heralded as the largest technology investment fund in history, boasting an initial capital of $100 billion, a figure that was unprecedented at the time. This ambitious initiative, championed by SoftBank's founder Masayoshi Son, sought to invest in cutting-edge technologies and startups poised to revolutionize various industries, from artificial intelligence to telecommunications. However, as we will explore in detail, this grand venture has encountered a tumultuous trajectory, marked by both significant triumphs and notable setbacks that have reshaped investor perceptions. At the core of the Vision Fund's strategy was a daring gamble on technology-centric companies, many of which were in their nascent stages. SoftBank's aggressive investment style propelled them to back over 80 startups within just a few years, including household names such as Uber, WeWork, and DoorDash. The Vision Fund's appeal lay in its promise of a relatively hands-off investment philosophy, granting startups the autonomy to innovate without being subjected to excessive oversight. However, this approach would soon expose vulnerabilities that would come to haunt the fund, as the lack of stringent oversight allowed for mismanagement and operational inefficiencies to fester within some of its portfolio companies. In 2019, the Vision Fund confronted a critical inflection point with the notorious WeWork fiasco. Initially valued at an astonishing $47 billion, WeWork's proposed initial public offering, IPO, was met with widespread skepticism, unveiling deep-seated issues within the company's business model and governance. SoftBank had invested nearly $10 billion into WeWork, and when the IPO fell apart, it precipitated a rapid decline in the Vision Fund's overall valuation. The fallout was swift and severe. SoftBank's stock price plummeted by nearly 30% in a single month, and Masayoshi Son's reputation as a visionary investor began to falter, drawing scrutiny from analysts and investors alike. This debacle not only affected SoftBank, but also sent shockwaves throughout the startup ecosystem, prompting a re-evaluation of the metrics by which venture capitalists assess potential investments. As the Vision Fund struggled to stabilize its investments, the onset of the COVID-19 pandemic added another layer of complexity to its already precarious situation. While certain companies like DoorDash flourished amid the lockdowns, others faced existential threats, highlighting the unpredictable nature of market dynamics. The fund's portfolio became a mixed bag of fortunes, and by the close of 2020, it reported an eye-watering loss of $18 billion, a staggering figure that underscored the volatility inherent in tech investments. What had once been celebrated as a visionary investment strategy was now under intense scrutiny, as investors began to question whether the fund's approach to risk was truly sustainable in the long run. Despite these formidable challenges, the Vision Fund managed to maintain its allure, continuing to attract attention and additional capital. In 2021, SoftBank launched a second Vision Fund, successfully raising an impressive $30 billion, with backing from notable investors including the Abu Dhabi sovereign wealth fund Mubadala. This new fund aimed to capitalize on the lessons learned from the first, with a renewed focus on more mature companies that boasted proven business models. Yet the shadow of the first fund's failures loomed large, altering the narrative surrounding SoftBank from one of unbridled innovation to one of cautious optimism, as investors became increasingly wary of potential pitfalls and the risks associated with high-stakes investments. By 2021, SoftBank's stock began to show signs of recovery, buoyed by the success of some of its investments, particularly in the booming sectors of e-commerce and fintech. The company's market capitalization rebounded significantly, climbing from a low of approximately $80 billion in late 2020 to over $140 billion by mid-2021. Masayoshi Son's reputation as a tech mogul appeared to be regaining its former luster, yet the underlying issues within the Vision Fund persisted. The stark contrast between the fund's high-profile successes and its considerable failures created an uneasy tension that investors could not overlook, raising concerns about the sustainability of its investment strategies and the potential for further losses. As we moved into 2022, the Vision Fund's losses escalated to an astonishing $32 billion, positioning it as one of the most significant financial debacles in recent history. The fund's portfolio was marred by a series of high-profile write-downs, including major players like OYO Rooms and Grab, both of which faced their own operational challenges. The once celebrated investment strategy had morphed into a cautionary tale, illustrating the inherent risks associated with unchecked ambition in the fast-evolving realm of technology investments. Notably, the fund's struggles coincided with a broader market correction, as rising interest rates and inflationary pressures began to weigh heavily on tech valuations, further complicating the investment landscape. Entering 2023, SoftBank announced a pivotal shift in its investment strategy, signaling a desire to learn from past missteps. The company began to pivot towards a focus on profitability, prioritizing investments in companies with robust financials and sustainable growth trajectories. This strategic pivot marked a significant departure from the aggressive, growth-at-all-costs mentality that had characterized the VisionFund's early days. Masayoshi Son, once viewed as a bold risk-taker, was now navigating the treacherous waters of a rapidly changing market landscape, where the stakes were higher than ever and the margin for error had diminished significantly. The legacy of the VisionFund is a complex tapestry woven with threads of innovation, ambition, and caution. While it undeniably reshaped the landscape of technology investments, it also served as a stark reminder of the volatility and unpredictability that accompany such high-stakes ventures. The lessons gleaned from its rise and fall will likely inform the strategies of future investors for years to come as they grapple with the balance between risk and reward in an increasingly competitive environment. The Vision Fund's trajectory has prompted a broader conversation about the responsibilities of venture capitalists and the ethical implications of their investment decisions. Ultimately, the Vision Fund exemplifies the intricate duality of success and failure within the tech investment arena. It highlights the fine line that exists between visionary thinking and reckless risk-taking, serving as a cautionary tale for investors who dare to tread similar paths. As SoftBank continues to redefine its approach in light of past experiences, the pressing question remains: can the Vision Fund reclaim its former glory, or has it irrevocably altered the way investors perceive the tech landscape? The future of the Vision Fund will undoubtedly be scrutinized closely, as stakeholders seek to understand whether it can adapt to the evolving demands of the market while maintaining its ambitious spirit. If you found this exploration of SoftBank's Vision Fund captivating, be sure to like and share your thoughts in the comments below. And stay tuned for our next video, where we will delve into another enthralling tale of money, power, and ambition, revealing the intricate dynamics that shape our world.